Hi, I'm David Stein, and in this video, I answered the question, how to spot an asset bubble and what to do about it. Last week, I was in New York City, and I was surprised how many conversations I had about cannabis stocks. Everyone seemed to be, well, not everyone, but a lot of people were very interested in it. Even individuals that typically don't invest. I had a sales associate from a clothing store talk to me about his pot stocks and why they were doing so well. I've had emails from others that are investing and they want to know, should they get out now? Are cannabis stocks in a bubble? Well, let's look at what are the attributes of an asset bubble. The first is everyone's talking about it, or a lot of people are talking about it. During the internet bubble, I saw taxi drivers were giving me stock picks all the time, their favorite internet stocks. You're seeing similar things when it comes to cannabis stocks. Is everyone or a lot of people talking about it? That's one sign of a bubble. The second is from a paper by Rob Arnott and some of his colleagues called It's a Bubble, So What? And in the paper, they point out that if assumptions used for purchasing stock, the embedded growth rate, how well these companies are going to do, if they're unreasonable, if they're just excessive, then that's a potential sign of a bubble. And you saw this during the internet days. If you looked at the top 10 companies in the S&P 500, a measure of US large company stocks, the top 10 companies, their valuations, the price that investors were willing to pay for earnings, if they had earnings, was so high that 18 years later, all 10 had underperformed the overall stock market. For every buyer, there's a seller in the stock market. But it's very important, what is the consensus of the buyers? What do they expect to happen to these companies? And if the expectations are just unreasonable, too high, then that's a potential sign of a bubble. The third thing that signifies a bubble is that many investors participating, they have no idea what the fundamentals are. They just expect that somebody will come along and buy and pay more than what they paid. I saw this with this sales associate at this clothing store. I asked him sort of, what were some of his assumptions about the companies that he owned. He had none. He hadn't considered what he paid for them in terms of the price to earnings. He hadn't really considered what these other fundamentals were. Did they have earnings at all? He just bought because he knew Canada was going to legalize marijuana, and so he thought this would be a good time to buy. And a number of individuals mentioned this Canada as a reason for buying cannabis stocks. You need to have a fundamental reason for buying a stock. You need to understand the fundamentals. What are you paying for it? And is that a reasonable? But a sign of a bubble is people disregard any reason and they just buy because they want to be part of it. So what do we do when we've spotted an asset bubble? Well, one thing we can do is not participate. We don't have to invest. We can just ignore it. Now that can be hard to do, and I'll give you something you can do to sort of overcome that fear of missing out. But the first thing is you do not have to participate. The second thing is you can invest in anti-bubbles. Is there an asset class that investors are ignoring that you could participate in that have very, very attractive valuations, that the consensus opinion is very, very low, and so there's a potential for positive surprises? The third thing you could do then is just participate a little bit. During the height of the internet bubble, I bought 3 very, very expensive internet stocks, just with a little bit amount of money, maybe $5,000, a very small percent of my net worth, just in case. It made me feel better. Yes, I ignored reason and I bought them. All of them lost money, but had the world really changed, then I would have participated. You can do the same thing with other bubbles. Cannabis stocks, maybe buy a few. Maybe it's different this time. But you don't want to invest more than if things didn't turn out well, that you would be financially harmed. So perhaps participate just a little bit in the bubble, but spot them. Is everyone talking about something? And seems like everything's doing great. And if so, what are the expectations that are priced into that investment opportunity? Are they unrealistic or too high? And then you can choose to participate or not, but that way you'll be a wiser investor. Hey, if you have any questions, you can leave those in the comments below. Thanks.